Hey everyone, if you are just tuning in, you are listening to Level Up Nation, and I'm your host, Stacey Preer, with the Dustin Pritchard Real Estate Team, and I'm joined with my co-host, Dustin Pritchard. How's it going?
Good, good. How are you?
Pretty good. Actually, I'm pretty excited because I'm joined today with two of my favorite mortgage people. We have Bernie Klacer on the panel today from Real Mortgage Associates, and we have my good friend, Mandy Leishman from Modern Mortgages as well. Hey guys, how's it going?
Good. How are you doing, Stacey and Dustin?
Pretty good.
Pretty awesome.
Thanks, guys.
Yeah, nice to have you back.
Yeah, so basically, obviously, everybody's kind of been in this quarantine. There's a lot of people that have been laid off. But in real estate, there's a lot of people that still need to buy and sell. Can you give us a quick market update on number one, what people need to get a mortgage in this kind of COVID climate? Bernie, I'll give it to you.
My favorite is everybody needs to be working full time, or they have to be at work to even for us to process an application and get approval. They have to be working, and we need all that documentation right up front, which we never used to have to do, but it's mandatory now.
Awesome. Mandy, you were saying before, obviously there is a letter of employment that was needed. Is there anything a little bit more inclusive from your standpoint?
Yeah, well, just like Bernie mentioned, anyone that's going to get a mortgage these days needs to be working full-time or part-time. So if they are working for someone, a letter of employment, last 2 pay stubs, bank statements, possibly for 30 days, just showing pay going in, last 2 years of T4s, if you're self-employed or there's income coming in from other areas, notice of assessments, letter of employment. They are verbally confirming employment. Don't be surprised or alarmed. That's nothing new. It's just they're following up with the letter of employment. All the banks are doing that right now. So, yeah.
Now, typically, you guys would be able to, like, you guys are very efficient mortgage brokers. So obviously, you put together a full package when you submit it to the mortgage people. But now you're including the letter of employment and all the employment information along with that, because it's not just mandatory, but it was also one of the ways that you were able to serve your clients a lot faster as well, right? But now it's status quo. That's the way it is.
That's correct. Some of the lenders we could get away without upfront documents and we get a real quick approval, but now they won't even hit the approval button until they have the documents up for review. So it's a bit of a change for some of our lenders, but it's better service for the clients too.
From my perspective as a realtor, I would say absolutely, it's a better service for everybody across the board, right? So who wants to go out there shopping for properties and not knowing whether or not you can afford it or whether or not you can actually get the mortgage, right? And realtors certainly don't want to be showing properties in today's kind of an environment with people that are not qualified, or maybe not qualified for that particular house. Maybe they're under shopping, over shopping, whatever it happens to be. So it's a much cleaner process from a realtor's point of view to have all the ducks in a row so that we know exactly what we're dealing with when we're serving our clients out in the field.
And for new home buyers, how long are these pre-approvals usually good for?
Basically, as long as they're working. And I mean, there's a big difference between a pre-approval and an approval, right? So like Dustin was saying, most realtors are really appreciating the fact that Bernie and I are looking through all the income documents before we can even hit the submit button to our lenders. But the pre-approval, again, is just you're pre-approved. Once you're approved, it means that the offer's gone into the lenders and we get a commitment letter back from the bank. But right now we're riding them out for about 120 days. That's where we can rate hold you. And then if it's longer than that with our new builds and stuff, we just have to keep pushing it back.
Yeah, that's unfortunate what's going on with new builds. Bernie, do you want to elaborate a little bit more on what a pre-approval is versus an approval for anyone listening out there that has never had a mortgage?
Yeah, like the pre-approval, I'll be quite honest, it just gives us a snapshot, an idea of what they can afford. It's still subject to the bank's final approval, because Manny and I, we can approve you for $1 million. And if you buy a piece of skunk house or junk house that the bank does not like, they won't lend on that property. So it's important for us to educate our clients that you're pre-approved, but it's got to be a decent home, or a good shape home, because that ultimately is the bank's collateral, is the house. So that's very important, especially in smaller towns. There's some rougher areas, some rougher houses that are a lot cheaper, but we have to just make sure it's still pending the bank's approval. So like I say, pre-approval just really holds a rate.
Nice.
Can I just ask a question on that? Just to dig a little bit deeper, because pre-COVID we were dealing with multiple offers like crazy, and speculative pricing from sellers, and buyers were coming in from out of town and other areas, and they were paying astronomical prices. I was seeing sometimes $100,000 over asking. Very, very difficult to appraise on a situation like that, especially since the last 2-3 months may have been showing the comparables at a lot less or at market value, and then you've got these speculative prices. And I know that you guys were having difficulty getting, I shouldn't say difficulty in all of them, but it was making it more challenging to get mortgages for properties like this, because there was just simply no comparables for the bank's collateral. Are you finding it a little bit easier now that things seem to be balancing out a little bit?
For sure. Like we're not seeing as many multiple offers like crazy 50, 60 over. We're getting list plus 5 or 10. But even back in the day, that's why Mandy and I lose sleep, is because people are going 50, 60 over, and they're going in firm. And then we got to just pray to God that the appraiser is going to come in. But touch wood, London's been a very good market in our area, but I know you guys go all around. So even all around, Southwestern Ontario has been very strong. But when I have a client going 100 over, and Mandy can attest to this, you better have some cash in the pocket to make up the difference. And that's a whole nother discussion about that.
And as a real estate agent, you better have mortgage friends. I don't know where your box will be, that know what they're doing.
Yeah.
Yeah, exactly. It's that's always been gives me stress at night, is when people go in firm.
Yeah, that's scary for us too.
Yeah. Well, there's a lot on the line legally too, right? So
yeah.
No, for sure. And I hope that it goes back to a little bit more of an equal market eventually. I can only speculate that once this is over, people who maybe were over mortgaged or living above their means might now consider downsizing. Do you think that now would be a good time for people to consider downsizing? Or even upsizing, I guess. Like right now, the way things are, how are the mortgage rates? Like what is going on behind the scenes?
Bernie, I'm sure I'm sorry, Weston? I'm sure, Bernie, you can attest to this. That's such a hard question to answer, because pre-COVID, we kept getting notifications that rates were about to start dropping. We were getting ready for the spring market. COVID happened. And I personally feel that day to day, sometimes morning to afternoon, rates are changing. Is it a good time to purchase? In my opinion, for anyone working, absolutely, because you're not competing with the 50 or 60 or 70% of the population who unfortunately has been laid off due to COVID and are collecting the CERB, which won't qualify for a mortgage. And I'll let Bernie take it from there, where what he thinks if people are going to downsize or upsize. I mean, there's a lot of people feeling crunched into their homes when there's 2 or 3 or 4 or 5 family members.
That's what I'm saying.
Just saying.
Gotta get out of here.
Yeah.
Yeah, I agree with Mandy. I think it's a great time to sell right now, because the market's still, we've seen a 55% drop in sales, but it's all comparable to buyers to inventory, right? So it's still, it's just coming down together. So I think if you're going to sell, you should sell now, because the market's still pretty good. Mm-hmm. I don't think we're going to see a huge correction with regards to prices. I think even pre-COVID, the larger stuff like 700, 800, 900 was kind of getting out of reach because of people's budgets. But anything under 5 is probably still going to be remain fairly stable all around the area. That's my opinion. So as long as you're working, and it's all about consumer confidence. If everyone comes back working, I think we're going to be guns a-blazing again in 3 months or 2 months. That's my opinion.
They are projecting that, you know, the market's going to come back with a vengeance. And London's a very unique city, and we're very fortunate because we're surrounded by the hospitals and the universities versus cities like, I always say this because that's where my family's from, but Sault Ste. Marie, where if the economy crashes, it's going to crash hard and homes will not appraise it as much. But again, London, we're very fortunate.
Insulated by so many different industries and big money industries as well. So it's nice that our economy is spread out.
Mhm.
Yeah.
Really
No,
nice.
it is awesome that way. Guys, how low do you have you seen mortgage rates going as of like the last 2-3 weeks? Buddy.
Happened pre-COVID, guys, that the rates were going down. And
Yeah.
then COVID hit, the market went in like a turn spin, right? So the banks were worried about liquidity. There was all this absolute scare, like the banks were getting scared. So then the rates went up to like 3.2, 3.3. Now the government has injected a bunch of money and bought all these mortgages from the back end of the banks. So now we're seeing all the rates come back down. So like we could get, Manny and I get you 2.29, 2.39 for a 5-year fixed on a 5% down. And what, 3 weeks ago, Mandy, they were, 2.89, 2.99.
Yeah, absolutely.
So they're up and down like a teeter-totter.
And I just want to, just like, that's how
Sorry.
busy Bernie is. I just want to touch on what Bernie said. We can definitely get rates of 2.29, 2.39 for, 5% down, 5-year fix. But a lot of times you get a lot of phone calls and the credit and the income has to support those rates. And that's what I was saying to Stacy, that you can read all about rates all over the internet, but you have to have the credit and the income to support it. Because if you are post-bankrupt or in a consumer proposal with no income, we're going to have to use the B lenders, which typically are higher rates, which again is another whole topic in itself. But yeah, we're seeing extremely low rates in my mind.
And these low rates are really attractive to a lot of people, but forgive me for asking this, but I don't think the banks are relaxing their penalties for doing a refi early before term. Is that correct? Or are they relaxing their penalties so we can go after those cheap rates?
No, the banks are never looking out for the client's best interest when it comes to that. They're very high, and actually the penalties would be higher because the rate, it's called the interest rate differential at the bank. So
Right.
I like to stay away from the banks. I'm sure Mandy does too, just because it protects our clients from taking advantage of this opportunity. And there's going to be a lot of people that have a boatload of debt after all this, so they're going to need to do a refinance when they get back to work.
How do you guys find the deferrals going?
I'm sorry, the deferrals for
Mortgage deferrals.
I personally, at the beginning, it got quite busy because people were reaching out to their mortgage agents and brokers trying to get the proper telephone number. I personally haven't had many of my clients have to utilize it. But again, there was 1-800 numbers and hotlines to call. So we weren't really in charge of that. I don't know if, Bernie, you saw a bunch of clients calling your phone personally about the deferral program, but I did a video about that, and it's not as glam as it looks to be, right? And there was just a lot of misleading facts out there on that, and I'm sure Bernie can explain even further about the deferral program.
Yeah, I'd love to hear more, guys.
Yeah, every bank is doing their own. Some of them are adding the mortgage or the interest to the end. Some are at the maturity. They're gonna, or when the term comes due, they're gonna reassess the amortization depending on how long you deferred it for. So it all depends on what lender. I honestly was telling my clients not to do it unless they had to. That was my opinion. But you know what? Some people had to. So take your 3 months, get, reset, and then we'll worry about it after.
Mm-hmm.
Fair enough.
Mm.
Guys, is there anything else that you want to let our listeners know regarding mortgages with our Monday morning mortgage update here? Anything that home buyers should be aware of? Anything that current homeowners who might be struggling should be aware of?
I personally still believe what Bernie and I have been kind of emphasizing the last few years since we started doing the Rogers Show with you, Stacey, just having a mortgage broker in your corner and making sure that you know your facts and you're educated on the whole process. Because the last thing that we want is for you guys to be out there showing homes and it's your time, it's your gas, and then us not being able to put through the mortgage because they haven't done their research or they're dealing with someone. And again, nothing against the banks, but you walk into your typical TD bank and someone says you are pre-approved for 500,000 and that's not the case. And I know for a fact that happens to Bernie and I all the time.
I call it Friday, 911 Fridays, mortgage Fridays. When financing is due, they call Bernie.
Yeah.
Because the bank's pre-approved them. But no, getting back to your point, Mandy, and for you guys, I think it's just, we got to continue to educate people. I love you guys doing this show. It just gives people, knowledge is power. We're in unprecedented times. And then the more we can communicate with our clients and other people, it's just going to make for everyone's going to be better, succeed better too.
Absolutely. Dustin?
Yes, I do. It's not a final thought, but I do have a question. I'm hearing about people that are currently in a transaction where they had a long close. Builders are definitely one of those, components to things. But, I was seeing people with 90-day closes that were having difficulty towards closing day because all of a sudden the banks changed their minds. Even after they committed to the mortgage, can the banks do that? Can the banks change their minds or change the criteria or get you to reapply, things like that, after you've actually funded on the transaction?
I personally haven't seen that with any of our clients. Again, the way I like to operate my business and I learn from the best people like Bernie and stuff is I make sure that my income documents are sent in right away. So that's one of the conditions just knocked off. So I don't have to worry about that. And any of my clients that have had to shut up shop temporarily or have been laid off, income was already satisfied. So I personally haven't ran into that problem. I've read numerous amounts of articles that banks can't just say, well, I'm not going to give you a mortgage now, but I think Bernie might be the better one to explain that because I haven't faced that situation just yet.
I got bad news, Dustin. They can. I just had one. The guy bought 3 brand new townhomes. He owns a very reputable restaurant in London. He had 3 approvals at TD Bank. They pulled the plug.
Yeah. That's what I was hearing.
So I got them done at a B lender, unfortunately, but thank God his wife had some really good income. But he was scrambling, the poor guy. He bought this a year ago too, right?
Right.
Townhouse condos, you know how they get delayed with the condo corp getting set up. So it's been almost a year. So that's the only one that I've encountered. So I had to fix it, and I was luckily be able to fix it. But I've heard some other stories, unfortunately, where the banks just are pulling the plug.
Bernie, on that note too, actually, I have found personally TD to be one of the most strictest banks.
Ruthless. Go ahead, sir.
So
the opinions on Level Up Nation are
These expressed are not those of.
right. Where's our legal disclaimer? That's our opinion officially. Yeah. Okay.
And now back to you, Mandy.
But it's true. Like, that's what I've been hearing, right? So if you've got obviously when you get a mortgage pre-approval or you get an approval and you got your documents and everything's okay, that rate is guaranteed only for an X amount of time, right? And from what I understand, the banks have the ultimate exit of if the market conditions change dramatically, that they have the option of pulling out and not collateralizing that loan with that property, or in the same kind of vein, or basically saying, no, we're going to pull out of this transaction. Right? Go ahead, Mandy.
No, and Dustin, just on that note, I was just thinking about Bernie's story about his client, and it actually just rang a bell that we also had a client who her husband wasn't going back to work. They couldn't give us a letter of employment stating when he was going to go back to work because he runs a campground, and we had to bring in the 71-year-old mom to co-sign. Otherwise, we were going to lose the deal. So, Bernie, you're absolutely correct. It is happening, and that's the sad news about it.
Unfortunately.
Yeah.
So would you advise your clients then to stay on top of their financing, especially the longer the term of, your close from going from firm to close, the longer the term, obviously the more mindful you have to be on your financing. But even if it's a 2-week or a 3-week, like things are changing. You said on this show today that mortgage rates and things are changing on almost on a daily basis. So would you advise your clients to be mindful of their financing all the way up until closing day, just to make sure that everything is, all the I's are dotted and T's are crossed?
Always.
100%.
Oh, yeah.
Well,
Not even during COVID.
You say always, but you know what? As a realtor, like once we got a firm, you got a firm. Like we're in a outside of the COVID kind of environment. Once it's done, and we don't really have to think about it too much. It's very, very rare for a deal to fall apart. Like thousands of transactions, I probably maybe see 2 fall apart because of whatever under a normal circumstance. But we're not living in a normal circumstance right now.
I personally, and I know Bernie's the same, we encourage and educate our clients right till the end, because just because your firm and you guys, the sale happens and everything, it's our job to make sure that they don't go out and maximize their debt ratios or furnish their entire home or buy new cars before the close or lose their job. So there's a lot that goes in on our back end that you guys might not see. And yeah, we have to follow them through the whole way.
I was just going to say that I'm like, and number one rule of thumb, do not go buy a new car, do not go buy new furniture, do not spend any additional large sums of money before closing day, especially now. Like if you've lost your job, if you're laid off, don't do it. Save yourself. Just don't do it. Guys, I want to say thank you so much for being on. We are running out of time here, but does anyone have any final thoughts?
Just thanks again for having us, and let's just continue to educate the people.
Thank you. Thank you so much for being on, Bernie and Mandy.
Thank you for having us, Dustin and Stacy. It was a pleasure.
Awesome.
Thank you so much for joining us. And you know what, for those of you who are watching today, if you're in the middle of a transaction or if you're looking to do a transaction, you do need to talk to a mortgage broker. And just like Bernie, I'm a big fan of mortgage brokers because they have the ability to shop your mortgage around to everybody to get you the best rates and the best terms, the lowest penalties, things like that. Don't go just directly to a bank. Get your options. Even if you've already got pre-approval on something, it pays to get a second opinion. So definitely reach out to your mortgage broker, and we've got 2 awesome mortgage brokers on our show today.
Thank you guys so much once again for being on the show. And if you guys were just tuning in, you're listening to Level Up Nation with mortgage specialist Bernie Klacer and Mandy Leishman. If you're looking to contact a mortgage broker, we will drop their contact information in the description of this video. And wanted to say thank you again so much for tuning in. You've been listening to Level Up Nation with myself, Stacy Preer, Dustin Pritchard, Bernie Klacer, and Mandy Leishman. Thank you again, and we'll see you next time.